Good day, everyone. This is Ron Groenke here, and I want to welcome you to this three-lesson series that I put together on how to improve your investing success. So let's get right into it, and I want to try to help you gain future opportunity in the stock market and show you how to generate excellent returns and income. This is lesson one of this three-lesson series. And we're going to cover what to buy, when to buy. It's my feeling that investors need to find the right stocks to invest in, and you need to know when to make the investment. That's key to success. This is not a throw a dart at a stock page and have it pick a symbol for you. You need to have a methodical process of finding good stocks, the right stocks, to invest in, and the time of when to make that investment. Well, this problem is now solved at Wall Street Winning with my trade technology that I have licensed to them and which they have implemented. Well, you might ask, well, who is Ron Groenke? Well, I have a bachelor's of mathematics with distinction from the University of Minnesota. I've spent my career in the, I'll call it the system software and modeling environment all my life. I developed a lot of programs. My first career was at General Mills, and with a mathematics degree, I worked in the operations research group and built large models to optimize their production and distribution and warehouse layout for even new warehouses and plants. I also developed communication software for the Apollo 7 and 8 missions. You remember 8 was the first lunar flight. It was a practice for basically 11, which made the landing. So it was very exciting to participate in that historic event. I also worked on some top secret communication protocols for advanced graphics at the CIA and the Army Marine Corps. I had a top secret clearance and spent a lot of time in Virginia at the CIA. I then had a long career at Comten and NCR Comten later, as NCR did acquire Comten, a small communications company in St. Paul, Minnesota. There I was able to develop a lot of communications capability. I delivered a lot of systems into the IBM marketplace, and I also invented the Comten Communications Networking System, which was basically a packet-based system close to what's available now on the internet. So we were pre-internet days and built large communications networks for major corporations. I was also one of 12 National Cash Register laureates. I received that honor for all of my contributions to product development at Comten and at NCR. I'm also the author of 5 books in stock and options investing, and I'm the author of the Visions Investing Tool software, which I've spent a long time perfecting and adding capability to improve my investment success. Now, I've been providing PC-based investing trade technology software for over 15 years. This technology has been used by thousands of clients, and it has been implemented, and now has been implemented as a cloud-based offering from wallstreetwinning.com. And this is the key. It's now available to a much wider audience, and it is no longer PC dependent. Any device that you have, smartphone, PC, iPad, anything that has an internet browser can get access to this trade technology at wallstreetwinning.com. So that's a major opportunity for all investors out there. So what does this trade technology do? Well, it applies a variety of data analysis based on all my background of modeling and information gathering. We do the analysis on stock fundamentals to find the right stock. We're looking for those stocks that meet a set of criteria. And I also developed a black box algorithm that determines when to make an investment that produce outcomes with a high probability of success. The key to investment success is finding the right stock and getting in at the right time. People say you can't time the market. Well, we're not timing the market. We are searching for good companies and determining when it is the best time to invest in those companies. That's the key to success. At Wall Street Winning, this process is performed nightly on a whole list of about 8,000 stocks and ETFs, and it produces about 100 to 150 buy opportunities each day. So in doing all of this processing every night, there are many opportunities available for anyone to look at to decide which is the best for them based on market sector, based on your knowledge of what's happening in the economy, in the marketplace, whether it's an ETF in an area that you like, or whether if it's a stock in the area that you like. Now, users can also opt in for a daily buy and sell alert via email from your watch list. So the key is you have a set of favorite stocks that you track, and you can automatically get an alert that says when to buy, when to sell, based on my trade technology. So that becomes almost an auto trader for you. For those people who do not have a lot of time to be able to analyze and watch things on a daily basis, this gives you the opportunity to get the alert and then take action at that time. These opportunities are based on stock fundamentals, charts with signals, and short or longer term, high probability of success option signals are provided on request. So you're getting a lot of information. The key is the information is being presented every day with no work at all on your part. All you have to do is go access your web page, your subscription, and you automatically get access to all the information. So there are many possibilities with winning signals from wallstreetwinning.com. It's basically using mathematics and data analysis to improve your investing success. The goal is I want to improve your investing success. So let's take a look at the trade technology and see how we determine what to buy. Well, we've got to find the right stock. It's been my experience over 30 years of investing that the best companies have these types of fundamentals. They have revenue of at least $250 million per year. So right away we are taking out thousands of little companies because they suggest risk. Only if you know exactly what those little companies are doing, you might even have a personal relationship, you know the players, you can be successful. Otherwise, the risk factor grows significantly. I also would like to have companies that have a revenue of at least $500 million a year. That's desired. That cuts out more companies, but we're looking for safety. So right away you can see I'm rather conservative. Market cap of $500 million or more, $750 million is desired. Again, I would like to find bigger companies. They're, in my mind, always more safe than a smaller company. Number 3, one of the most critical elements that I have put on my list over the last 25 years, positive revenue growth, and greater than 15% is desired. If I can find companies that meet this criteria, my success rate goes way up to 98%, because positive revenue growth says the company is in fact growing in its marketplace. Very key for success. Any companies that have low revenue growth or negative revenue growth are suspect. There's something happening. That the company may be downsizing. It's having competition in the marketplace. Prime example would be BlackBerry. Very successful company early on, but as soon as Apple came out with the iPhone, they got hit and their revenue growth went in the tank. That's exactly the company you don't want to invest in. So positive revenue growth is a key fundamental. Number 4, I'll call this the second one and highest on the list. Positive earnings for at least 3 of the last 4 quarters. I would like to have all 4 quarters positive is desired. If I can find companies with 4 quarters of positive earnings, it is a great opportunity. Number 5 is positive bear cash. I want at least greater than 100 million is desired. Positive is the lower case. What is bear cash? Well, bear cash is cash in the bank plus marketable securities less long-term debt. So if you look at their balance sheet, you can find out exactly what that is. Major companies that have very high positive bear cash are Apple, Intel, Cisco, Microsoft. They have billions of dollars in the bank. They can sustain economic downturns. They don't have to downsize to maintain a certain revenue stream or to maintain a certain earnings. The key is positive bear cash is desirable, and greater than 100 million is even better. Number 6 is having trading volume of at least 250 million shares per day. I like to invest in companies that are highly liquid. They're being followed by organizations or by institutions, and therefore the market is there for you to buy, sell the stock itself, or even trade options. So the key is we're looking for companies that are in the marketplace and being traded on at a high level every day. Number 7, have a buy rank greater than -15. This is a calculation we'll show you later. This is a way to sort out or to compare one company to the next of what is the better opportunity. If all these other fundamentals are kind of equal, then number 7 gives you a way to say which one would be a better candidate than the other. So these are the key fundamentals in finding the right company. And the question is now, how do you go about doing that? Well, let's take this summary. There's eight of them right here. These are information is all available on the internet. All you got to do is go find it, and it can take you forever. It can take you days. I mean, you can go look at MarketWatch, you can go to Yahoo, you can go to your trading platform, and all of this data is there somewhere. The key is, how do you gather it together and compare it, one, company A against B against C? It takes a lot of time and a lot of work. Well, I've automated that, and that is the key to success. Automation, using the information to advance your decision process. 3 conditions: conservative, stocks that meet all of these criteria will be conservative. The next ones, if we ignore bear cash, can be negative, becomes a moderate. Ignore bear cash and revenue growth, it becomes an aggressive. So those are the 3 categories. And now, so that tells us what to buy. The question is when. When do we go? If we find an opportunity, it meets all the fundamental criteria, when do you get into the stock? When is it the right time? And yes, timing is important, as I'll demonstrate. Well, we solved the problem with the black box that I have. It's an algorithm from the desk of Ron Groenke. What is this algorithm? Well, really look at it this way. It's a finite state machine. We look at the technicals of the stock, which is what the stock has done the last 52 weeks. We start out in a wait situation, and at some point we're going to buy the stock, then we're going to hold it. And while we're in that hold state, there also may be an opportunity that says, well, it's okay to buy still. So we'll get a hold buy case. At some point, we're going to sell. 2 conditions. We'll sell at a gain or sell at a loss. There's a time to get in when it's up significantly, and there's a time to get out if it has dropped. So we want to be able to have both opportunities, but we need to look at both cases. You don't buy something and then hold it forever hoping it goes up. It can go down. And there's a time when you have to make the decision to get out. So the finite state machine will determine the sell at gain and sell at loss. So it's a mathematical model, and there are states that a stock is in, and we move from one state to the next. It's based on a triggering event or the condition, and that transition is based on, I'll call it my black box and trade technology. So it's a trading algorithm that triggers each transition. What is this trading algorithm? Well, let's determine or look at a chart. Here we see when to buy and sell on this chart. So the algorithm tells you when to buy, when to sell, and if you notice, you buy low, sell higher. And you just don't do it once a year. Here's this is a 52-week chart. You'll notice that we had 8 trades. There's information down at the bottom that shows you the trades. Right down here we have the trades. We got 8 trades. You can see the return for those 8, 36%. And the time frame was basically 336 days. So each one of these opportunities here, buy, sell sequences, okay, are a set of trades. The system said buy, then it said sell. We're currently out in a buy mode right now. Look at this action indicator here. Okay, it says buy, and we have my algorithm, my black box algorithm, closer on the chart. Let's take eBay as the example. And what we're going to do is we're going to analyze what's happening right now. What right now is right here. How is that determined? This is what we're going to look at. This is where the stock is trading today. This is where it traded 10 months before. That may influence what's happening, but we want to determine, based on what's happening right now, when is the best time to get in. And look at the state. The state right now here is wait. We're in a wait state, which is the finite state machine. Remember, wait, buy, hold, sell, back to a wait. So we're in a wait. We're waiting for this buy condition. So let's blow up that part of the chart. And here's the information that we have there. We have this. I'll call it red. It's kind of an orange line. This is called the buy limit. This is a calculation. This is a formula I developed. We have the 50-day moving average, which is this blue line here. Okay, there's the 50-day moving average. This is the buy limit right here. There's our buy limit. We have the stock price. That's just mapped to what's happening every day on the stock, going up and down. And then we have something I call the Groenke V. This is I'll call it price funnel. This thing right here is a price funnel that I've developed over time, and it's associated with the red line, the buy limit. So it's the key of how this is created is from the buy limit. So the algorithm, it uses the following technical analysis components: the stock price and direction, the 50-day moving average, the buy limit, and my Groenke V. So these are the components of the black box. And how does that enter? How does that determine when to buy? Well, if you look at the formulas, the buy limit and the buy rank, I said earlier the buy rank was one of the parameters. This is how it's calculated. The key here, though, is the buy limit. We start out with the 52-week low plus 1/4 the 52-week high minus low. So the buy limit changes every day, can change every day, because one of these parameters changes. So if every day we move to the right, one trading day, right? So the previous day trading 250 days past could have been the high. If we throw that away, we may have a new 52-week high. It may change, or the low may change. So every day this buy limit could change. And then we have the buy rank. That allows you to compare one company against the other. So the buy limit is part of the buy rank calculation. So that's why we have to calculate the buy limit first, then we can calculate the buy rank. Now, it's important to understand that the buy rank has a value. It's a number range. It goes from -30 to 10. So what the buy rank does, it kind of takes out the stock price. Some stocks can be $100 a share, some 10, some can be $600 a share. And you'll notice that the buy rank allows you to compare different price stocks against each other on this value. So we want to look at, we like buy rank between, I'll call it +5 to -15. That is kind of the target area. If a stock falls, if this calculation falls in that range, it is an opportunity for us to invest. So a little bit more detail of this algorithm then is on that formula, the buy rank. We also can change that 1/4 from, we will calculate from 0.25 to 0.5. We're going to optimize all the way from 10 to 52 weeks. We'll look on sell at gain, sell on loss, and our return signal of 71 to 100. So there's a calculation that takes place. It's important to note that anytime a stock is in a wait state, we always want to look for the best opportunity going forward. So every day we're going to reprocess the data because stock prices do change. Remember, we are looking at a 252 data points. We add one at the end and throw one away at the beginning. That changes all the calculations for the whole series. So we have to recalculate and rerun the algorithm every day for every stock. It takes about 10 minutes on an i7, Intel i7 processor. So that is the time it takes to crunch the algorithm. That's a long time. For 8,000 stocks, it takes about 60 days with an i7. Well, we do it every night. It takes about 4 hours, and basically you just throw the problem at many servers. So it's basically it's a formula that you just throw stock symbols at servers and it comes back with the result. So it's not a small task. So it's one that if you had to do this by yourself, you just can't get it done. You can do it, but it takes you forever. So that's why it's important to understand the underlying technology of providing the information every day for you. The key is buy opportunities are published every trading day. That process is done at night, takes about 4 hours, so that every day you have an opportunity. You don't have to say, well, I got to search for 5 days to find something. Every day it said it had a target return of 43.51%. Well, here that is. Here's that number right here. And how did it get that? Well, it did these buys. There's a buy there, and then it did a sell. Right? Buy, sell. So it basically, decided that it was time to get in, time to get out. And notice you say, well, you missed 10 points, or you sold at 125, could have sold at 100. You don't know that the stock is not going to go like this right away. The algorithm says sell based on a return that is acceptable. And look what happened. It went up and then it crashed. And look, the system, the trade technology did not issue a buy anywhere along the way. In fact, the stock is going down. It knows the stock is going down. The formulas say the stock is going down. It says, wait, 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 wait. So this is the wait state. We're in a wait condition. From here to here, it was a wait, right? You can type this out here. W-A-I-T. Patience. Wait. To be successful, you need to have patience. The system will tell you. And what happened? It went all the way down, returned. Okay, so here in February, it turned around. And bingo. Now here it said buy. Okay? The algorithm determined that things have changed. Okay? The direction has changed. The momentum has changed. And now it said, okay, buy here. And then it already met the criteria here. Sell. Because the suspect was, look at it, started to go down, right? See this notch right here, it was going down. So, but it went down, went back up. So it said, okay, that's okay, buy again. And then it said sell here. Okay? So we had a buy, sell, fairly close together, right? I mean, there's, the number of days here is about 20 days, which is okay. There's nothing wrong with that. Remember, we had, if you look at the chart, we have 5 wins, 5 out of 5. That's 100% win rate. So now the new buy is right here, right? We're now at the chart, we're at the buy, and here's the price, 95.9. It says this is the buy signal, and it says sell when it gets to 103. In other words, here is the sell on gain number. Once the stock reaches this point, it is time to consider selling, because in past history, every time it issued the sell, what happened? A lot of times the stock went down. Okay, so it is determining that, okay, we'll buy here and we're gonna sell here, or we got to put a stop loss. We'll sell on the downside. If this stock goes down for some reason, okay, we want to be able to, I'll call it here. This is the red line. We want to reduce our loss. Okay, so the stop loss is 87.27. So that's about an $8 price going down, $8. So this is the key. This says buy based on what the stock is doing now, what's happened in the past, and the fact that it has good fundamentals. So here is the view of the fundamentals. Okay. Remember, we said this was a moderate. It's a M4. Oh, that's pretty good. Remember, 1 through 5. 5 is the best on the cases. C5 was a diamond. This is a M4, which is very good. And you'll notice that here is what causes it to be a moderate. Bear cash is minus 90 million. Okay, that's probably acceptable. That's pretty close to zero in the grand scheme of things. When you look at the it's a $6 billion company, $46 billion market cap. So minus 90 million is not, it's negative, but not very negative. Okay, so if this would have been basically positive, this would have been a conservative investment. So this is very acceptable in my book when I look at the numbers. Another key element is earnings were announced, so we don't have to worry about earnings date. It happened 4 days ago. So that's a parameter that's very important. You may say, well, because stock prices change around earnings dates, okay? Things happen. You can't forecast. Sometimes they can have good results and the stock goes down for whatever reason. It's it's what the analysts think. It's what the market thinks. So that data or that information is posted on the fundamentals. It's there for information. There's no the buy situation, this buy signal up here, okay? This buy signal was not based on anything about the earnings date. It's not one of the filters, but it's there for your information. Add to your decision process. So the buy then here is suggesting buy. You can see exactly where the parameter is right here on this scale here. Buy at 95.90 around this point. When you buy it, maybe a little bit higher, a little bit lower, but here are the sell points. Sell above that and sell below this. So all of these parameters are provided in the fundamental page. You remember, see, it's a member of the S&P 500, the NASDAQ 100, and it's a Fortune 500 company. Here's the 20-week range. In other words, this cycle for the buy-sell is at a 20-week range, and look at the upside we have. I like to look at this bar anytime that we're below the midpoint. Now we're basically this side of the midpoint. It's an opportunity for this stock to run up to 130. This is past history. We have 4 quarters of positive earnings. Very good. This little bar here is what we call the firecracker. It's a candlestick on its side, and it's basically the price every day. So you can go to Netflix, look at the fundamentals, and you can see the current price for the day. It's open, high, low, and close. You see the close at 95.90, which is this last close. So this was the trade on the 22nd, right? So this was basically what happened on the 22nd. It opened at 94.55. It got all the way up to 96. It closed at 95.90 on April 22nd, and now it became a buy opportunity as a result of that trading history. So very key set of information on the fundamentals, okay? And it would take you an hour to go get all this information. by yourself for one stock. Remember, you have it available for thousands of stocks every day at wallstreetwinning.com. You can also look at the profile. If any company, you look at the symbol and say, well, what does that company do? You just click over here on profile. Here's profile. Click on that and you get a description of what this company does. Very helpful. Remember, I said that my Netflix was on my watch list. Well, you get to select. You have a watch list and email. It's buy and sell signal detail. What does that look like? Well, I got this signal right here, for example, for XME. This is an email signal. It came in my email. It said buy, and it gives me a set of base information. You'll note that what the last price was. It'll also show you what it is. This is conservative. And is it a member of any one of the track portfolios at Wall Street Winning? Yeah, it's a member of the bronze. This happens to be an ETF. It's identified here as an ETF. Very high success rating. What's the success rating? We'll review that. But here's the detail of the buy signal. Here's the last price, the target annual return for this guy. The success rating, 5 is the highest, so it's at 5. And the potential return, okay? What does that mean? Well, based on past history, this is the value. In other words, the stock, this ETF in past trades has gone up in about 7 days in a $1,300 return. Okay, so this is why on this buy signal, you should be able to exit this trade in a very short period of time with a positive result. The success rating, okay, it's a combination of the win-loss ratio and percent return. That's how the thing is calculated. It's a calculation. And these are just, I'll call it the icons that show quickly, if you say, okay, what is 3 money bags? It's good potential. Anything below 2 is okay, 1 is marginal. In other words, do you want to take the risk, okay, just for this situation now? Once in a while you might, because you really like the company. You say, if all the filters showing it's a buy and it's marginal, but if you've been successful in the past with it, no problem. But we're at least identifying where it fits in the list. A sell signal in email is just a very straightforward sell, the symbol, and the price. There is nothing else to do. The decision is sell. There is no contemplating what's happening with fundamentals, etc. It means sell, sell. In other words, you can't procrastinate on the sell signal. So that is lesson 1. What to buy, when to buy. I hope that'll give you some background on how that's determined. And it's a key to your success. So this is the end of lesson 1. I suggest that after you've gone to this lesson, go review lesson 2 and lesson 3 to get the next steps of improving your success as an investor. Thank you and have a great day.